The Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, I've been talking about this strike coming up going back to last week. It's finally here. Looks like people are starting to realize the potential impact, and we're coming into big employment numbers, and I think maybe there's more surprises than we imagine. Let's get into tonight's video. Welcome, everyone. Sorry for the late start, another late night, even later than always. Yesterday was an impossibility to go live, so that's the way it goes. So hopefully we get some folks joining. I know it's incredibly late, but anyway, you'll get to watch the rerun on this. So let's talk about a few things that I think are going to be important going forward. I went on in Substack, on the YouTube channel about this longshoreman strike, and now we're seeing the true nature of the strike. I don't think it's about money. The guy that's screaming his worker needs to be paid makes like $1 million a year, right? So the union bosses want the control, so he thinks he now runs the country. I think it's very interesting. Listen, everybody needs more money, okay? This is what happens when you have an inept administration, runs up inflation, spends money out of control. We go through the pandemic, all the money pumping that we've seen, and we end up here. And of course, people need more money. I don't know. I'm sure virtually everybody on here would like a 76% increase in wages. Here's the thing, though. These guys are in trouble, and they know it. Their jobs are over. There's two places where automation is going to hit first. The ports are number one, shipping, everything. You've seen it all. I watched a video. It should be fun to watch together and talk about. But we saw I saw this entire port. I think it was outside of Shanghai. Doesn't matter where it was. Giant, one of the largest ports in the year and planet in China. No longshoremen. Bunch of guys on computer screens with videos. I see guys running multiple automations on one screen. They have 4 or 5 looks like my desk, right? They've got all these monitors running, and their jobs are over. And there's going to be some people needed, but this is going to be one of the jobs that are going to be eliminated, rightfully so. The machines won't ask for more money or hold up an entire country and to get more money. And the other thing is the railroads. The railroads have already been working on a lot of automation, but think about it. They don't have to worry about, turning, all that. They get on a track, they go. Those things are going to be the easiest to automate. And I know that there's been leaps and bounds on the automation of the rail system. There's probably going to be some places where they'll build even tunnels or bridges, so there's main traffic that doesn't even have to be affected by these trains. So a little bit of modification, the rail system gets automated. Rail system's out of disrepair anyway. Just about every infrastructure that is in this country is really bad. If you've been to Europe, you know what a real rail system looks like and how effective it can be for moving people around on a regular basis with minimal hassle. So, anyway, those are two industries that are going to be impacted the most by automation, by robotics, and those things. So I'd say to the longshoremen, work on your resume while you're out. You got some extra time on your hand. You might want to do that. I almost want to go radical. And listen, my dad was a union guy. I grew up in a union family. My dad was a carpenter. And, anyway, all I can tell you is I think this is more about power. This guy, I said it in Substack last night, this guy's more like a mafia boss. We're going to cripple you and all kinds of stuff, And then I saw him being interviewed by a Fox news reporter. He goes, oh, you're going to twist it anyway. You're from Fox. So we know we know who he's with. It's interesting, though. Think about this. Uh, our president says, "Well, I don't want to do Taft-Hartley, and all you don't want to go there because that would be intervening. They wouldn't want collective bargaining to be forced in any ways. There's a lot of things that could have been done long before yesterday to avert this, but it's like they wanted it, but it doesn't make any sense, right? They could have postponed it for 60 days past the election. There's a lot of things. So let's tie this back. And where I've been telling you folks for a while is I strongly believe that we are going to see that inflation bounce. Let me just let me see if I can get some things up here that I can illustrate this on. I believe I have. Yeah, so let's go here. So this chart here, I've showed you folks this before. This is the Algo's forecasting this blip. This was the inflation rate year over year, but I could go CPI, I can go through all kinds of metrics. I have done this, and everything is pointing to some kind of blip, and more importantly, it really starts in 2025. So every day that this strike goes on, if it gets extended beyond 2 weeks, it's potentially going to get very ugly, and you're going to see price spikes. So as we come in October, November, and beyond, this is not going to be easy to reverse. And I know I put an awful lot of weight in this. We did see the markets wake up on the 1st and go, after we had the window dressing on the 30th, now all of a sudden we get a bit of a sell-off, but everything pretty much stabilized already. As I've been saying, I don't see any major disasters or declines. I'll go through some analysis here in a few minutes. But I think this is a really interesting point in time that we're going to have to pay a lot of attention to. I've got the results of the database, and there's some reaction to some of this craziness and some of the sideways choppiness, but not a lot. And I'll go through that in a minute. Just want to make sure I unpack everything I was talking about. So, automation is going to be, what's happening. Elon Musk is building a robot, army of robots, or he wants to, right? So it's like Star Wars and the clones, right? That's only those were humanoid type things, but this is where the world's going to. So I guess the good and bad is demographics say the world population is shrinking drastically, partially because of a lot of elements, and there's a fair amount of folks that would like to see the population shrink, and they don't have to worry about it too much because we're not procreating enough here in this country to maintain anything. The only thing that's keeping us any kind of population growth is a border that's about 190 miles from where I'm sitting right now. And other than that, there's no population growth through births and those type of things. That will probably turn around because a lot of folks are coming in, are building families as well. But the point of all this is that, and I'm going to tie this together because we're going to go back to the Fed here in a second. But I have to ask the question. We saw JOLTS numbers. Let's just go there now. We saw the JOLTS. We saw other things come into play where employment is still very strong. ADP came in better today. We're going to get employment on Friday. So I asked the question again. Somebody said, Bob, you're the one getting political. No, I think it was Jay Powell and the Federal Reserve, because they dropped rates by 50 basis points. And you have to ask yourself, why did they do that? Because there doesn't seem to be any evidence around that that's the appropriate action to take. There's no slowdowns, the soft landing scenario, all that stuff. And now they got to be talking. I would love to be on any of the private channels that the Fed governors and presidents have of different banks. And I'd love to hear some of those conversations, because my guess is they're like, we probably shouldn't have done 50 basis points. maybe, and I argued 25. I know somebody was on, I think the live stream I did the day they did that. Actually, I did a live stream during the Fed, and said, Bob, how did you get it so wrong? I actually said it was possible to do 50, and it makes sense based on the back end of the curve. I just thought they would take more of a minimalist and incremental view on how to lower the rates back. We're once again pricing 65 basis points or 50 basis points by about 65% probability again for November. That'd be 1% in 2.5 months. That's a lot, folks. I don't think that's going to happen than anything else. But so my feeling on all of this is that there's a lot of the noise that we're seeing in the markets right now is by design, and that I think we're seeing some engineering going on with the Fed dropping rates. All of a sudden, we get this strike. How far does this strike go? I saw this guy, this mobster guy, forget his name. He's even got a mobster kind of name. He's got that classic New York accent. Love New Yorkers, by the way. Worked with him my whole life. I don't have a problem with New Yorkers, but he's got that gangster voice. But he's once again, like, I don't care about the U.S. the people. I saw this. I'm paraphrasing. Okay, he said something to the effect, "Well, now you understand what the longshoremen are, how much we're needed. Now you get it." So it's interesting. We got a natural disaster going on. There's a lot of supplies. I saw Ron DeSantis on the TV talking about, hey, we just went through a major hurricane, and North Carolina, Tennessee, everybody knows what's going on in this country. And it's just amazing to watch greed at first-handed. And I wouldn't argue these guys deserve some kind of a raise, but, it's very not so timely, we'll say. All right. So, I don't know about green candles. I'm a little worried about Bitcoin. I'm just looking at a comment here. We'll get through that. But I just want you to understand that what's going on right now, this is a bit of a shift. I think everything is actually by design. I don't think anything's happening that this will be interesting comment. Because if you think about it, the Fed did 50 basis points. Did they know there was going to be a strike? Did they know there was going to be, some kind of event like this happening? It's hard to say, right? Maybe they did, but I believe, I told you this the last time I did video, the day before last, is that we're seeing every central bank doing this. We're seeing everybody, okay, it's okay, lower rates. And you see some of the stuff going on in China. There was a big bid in China, so there was definitely a big trade-off off of that stimulus move they made the other day. But the point is that, once again, the world is scripted. You can see it. I'm sure you folks have seen all the news where this is a threat to our democracy, and they have every news channel in the United States saying the same thing as they're going through talking about things. And we're seeing everything on this planet scripted, whether it's, it's just absolutely amazing what's going on here. So we have to pay attention. We got the ADP numbers. One quick thing back on employment. We got the ADP numbers, a little better than expected. I think I've been arguing that ADP numbers might be better than the BLS numbers just because they're not government issuing them. I have no faith in the government numbers at all right now. Maybe I'll regain it. Maybe they'll show me something. If they don't adjust GDP in the next, I'm going to give them 60 days. If they don't change a lot of the metrics in the rearview mirror that they reported to us, telling us how good the economy was and employment and all that stuff, which we know is a big lie, if they don't fix that and clean that mess up, then we know that basically the entire system is somewhat of a fraud. And it's just not, we're being told what they want us to know. So I'm done with my conspiracy. I needed to get I needed to get that out. Okay, so hey, listen, I'm getting old, man. So I was telling associate, we work together all day today. Is when you get older, you stop putting up with the BS and you start calling it out. You finally get done. You know, you get sick and tired of being sick and tired of this stuff, and you know, being around these markets for, you know, 45 years is a crazy number to even say that you've done it and you're still active in the industry. But to actually realize all the stuff that has happened and having that context, not by reading it, but by living through it and being, you know, head analysts at firms and being in really research departments and being at hedge funds and a floor trader and all the things I've done, man, all of a sudden, everything looks a lot clearer. That, you know, things that you went, what was that song? Things that make you go, you know, just about everything is fascinating to me right now because nothing seems to make sense. And even though I was kind of able in the past to go, well, maybe that seasonal adjustment was that tweak that they had to do to make these numbers work. But now we know just about I think we're seeing incompetence at a government level like never before on the planet. And I think that also happens. I'll get out of this loop. I promise you we'll get onto the markets. But I think this happens when bureaucracies get so big that they're uncontrollable. And then you get too many you know, spokes in the wheel. You don't need that many. And so it's going to be interesting. We're ready for a change. We're 32 days, I think, out from the election, 32 or 4. So make sure those of you Americans that you get out there and do whatever you feel like is the right thing to do. I'm not telling you to do anything other than get out and do what you think's right. And okay, so let's move on. Let's talk a bit about tomorrow. We've got the claims number coming out, the continuing claims. Those are going to be interesting numbers. I've argued that those numbers are also more accurate just because they come out so frequently every week. They're weekly numbers, and the adjustments kind of get moved around fairly quick. Within a couple weeks' time, they're already being adjusted. So you don't see this big audit on those numbers like we saw on the unemployment numbers. So I'm striving to find numbers that we can look at the economy, try to make sense of what's going on, just so that we can make good decisions in the markets. And you know, we also have to deal with two things. It's sort of like I'll use this analogy. I had a friend that I talked to this many years ago, and he said he got in a car accident. And he went through the front windshield, and I thought, how did you do that? He goes, oh, I don't wear my seatbelts. I'm a good driver. And I just started laughing. I go, but the other guy's not. And that's what we're seeing here. You got a lot of bad traders out there. You got a lot of people that are willing to respond and react to. This is not a troll on the millennial traders, but the millennials are in complete control of a big segment of the economy now. I flash back all the time when I was in my late 30s. I got my first research job when I was about 36, and everything, you know, the management, all the firms I was at the time, we ended up being the guys running the show. So the transition is happening in a fairly big way, and that's a good thing. I'm not trolling at all, but when those happen, mentality, the sentiment, the way markets respond to things actually change. And I have been seeing substantial amount of changes, especially in these big stampede trades and things. There's so many market participants that these things get pushed way beyond where you think they should go. So I think enough of that, but I am thinking we're going to see a bounce in inflation. It could carry in through early 25, and so be on alert. You know, I think the Fed may have, out of fear, maybe out of politics, whatever reason, that 50-point drop may come back to bite them. If you remember, Powell stressed, oh, we don't want to move too early because that could ignite inflation, or We don't want to lose too late because that could roll over the market. So the bottom line is they got a dartboard somewhere, and somebody hit the bullseye on 50 points. So that was it. So anyway, let's get into talking markets here, and we'll go forward. Let me just take this out of here. Bear with me 1 second here while I just got to get a screen ready. All right, let's come back up. So let's start with, you know what? I've got the S&P, but I'm just going to flip this over. I'll show you the database. We're 69.23. I'll cover this in a Substack. If you don't have the Substack, get the Substack. It's $8 a month, or you can buy it for a year and get it like $6.65 for a year. If you do it on an annual basis, I think it's $80. So get it, okay? I enjoy writing it. It's I tell you all the time, I trade the best when I'm writing, and that's why I went to writing again. And that is true. I can look over at today's trading epic day, okay? 5-minute chart V bottom on the E minis was there's been some unbelievable trades in the last couple of days. So real quick before I get too deep in, and I know we're 21 minutes in, but don't forget, those of you that have the indicators, is the Discord at 2 p.m. on Friday. I will be live on there. I'm going to do a brief presentation. I haven't decided what I'm going to talk about yet. I'm going to do probably a half-hour presentation on one of the indicators or a group, or I have my setup, something, and then we'll do Q&A where you guys can ask me questions. I'll hang out for 2 hours. I'm doing that every Friday. So if you don't have the indicators, get them, and you can go from there. So let me do the database here. So we had 819 exits, 249 new buys. We dropped a little bit to 69.23% bullish. This is still a robust number, folks. This is a long ways from being negative. This is a short-term database. The long-term database is up at 77% bullish. It's incredible. Like I've been telling you, I'd love to find a way to get negative on the markets, but there's no way to do it. It's just not there. And there's certainly minor corrections. You can see anywhere from 3 to 5%, maybe 7, who knows, maybe even a 10%er in here. But the big collapse is not happening, not at the moment. We are coming into, I believe, the second week of October. So not this week, but the end of next week will be the anniversary of when we started getting a lot of traction a year ago. If you recall, in 23, we got the little bit of a sell-off through the summer, came in October low, bingo, off we go. And I told you folks all the time, if you read my Substack, my outlook for 2024, I was talking about back-to-back double-digit return years. So far, that's happening. We're coming down into the stretch here. We're in the fourth quarter. So things look pretty solid yet. Could change in a heartbeat. We got a lot of stuff coming at us in the next 30 days. But looking at the database, like I said, there's just no way to get negative here. Not that we can't see some correction, which I'll talk about here in the S&P. So let's do one thing real quick. I promise this will be it. So I mentioned the indicators. So there's 3 ways to get the indicators now, and you can go in, you can buy them outright, cheapest way. You can subscribe, get a 7-day free trial. You get also a 7-day free trial with rent to own. So there's a little bit of a premium rent to own, but basically this is going to tie together with these weekly Discord meetings. We're also working on a Market Mind that's coming out pretty soon. We're going to be announcing it probably within the next 10 days. And we'll be doing an event that will be similar to what we did last year, only I think we learned a lot from doing a virtual event last year. And I still have this fantasy of having a big kind of meet and greet and meeting and having some other folks come in and do something in Vegas, maybe next spring. I said that last year, but maybe it'll happen. We'll see what's going on. Anyway, so if you haven't got them, just to get them, Kendall Report. You got to do www.kendallreport.com indicators, and you can check it out there. There's some information there, and it'll guide you through all that. Okay, back to the markets. So let's go ahead and take a look at the futures, and this is it's interesting because one of the things I was actually talking to one of our clients and retail clients earlier today, and I was telling them it sometimes with the indicators it feels like cheating. It's like having tomorrow. I joke it's like having tomorrow's Wall Street today, but sometimes it's like having the Wall Street 3 days from now. If you go all the way back here to the September 20th. This is when we started to see the algo starting to forecast going down. And this has been a new pattern. This is something that I want you folks to pay attention to because these patterns emerge all the time. It happened in the Russell. It's now happening in the S&P, which is these distribution tops. These are not consolidations, it doesn't look like. Looks like more of a distribution. They'll come back and come into a support level, and then we'll maybe get a bounce from there. It looks like these things run right now. The forecast is into the end of next week, then maybe a little bottoming, but the secondary PPM 2 and 3 are suggesting there's more to this. So my expectation, just looking at doing the reverse fundamentals, if we're going to see some downside and there's going to be some softness in the markets, what's going to cause that? You got the election, you got a lot of uncertainty. Do you really want to put a big bet on? I'm not sure you do. It looked like on the 30th, the window dressing that went on, we saw a lot of folks moving around some stuff in their portfolio, but was it defensive? What were they doing? Who knows? But we did see a fair amount of action, and immediately since then, we're seeing a relatively down pattern. Now, last night I talked about we got an outside reversal pattern. We actually closed higher today. We did make a lower low, but we closed higher. If that trade is out, there's no confirmation of the 3-day trade, so we can stop talking about that now. And really what we're seeing here, though, is I come into the 9th, we see PPM2, that's the red indicator here. That is the next level where we're going to see a breakdown coming in around the 9th of October is being forecasted. And then we're seeing ultimately the peak of the cyan line, which is where I put the X there. That is the PPM 3, which is showing that momentum is starting to roll over. It's not really going to go negative, so it's not really projecting in the future a big downtrend, but it does suggest that, and I mentioned this in Substack last night, that the target ranges will be just rough numbers at the moment, 5680 to 5620. That's going to be your support levels. And we're probably going to continue to press down into that level. And that looks to me like that's going to be a thing. And then we should start to maybe see a little bottom set up around that. So let me draw in this pattern just real quick so we can all connect to this. So what's likely to happen, we got this, we got the distribution, we come down into support, and then I actually think we get a lot of work in here. I think this pattern runs us into, here's the end of November right here that I'm drawing up right now. That's the end of November. I think we could get just one of these elongated I would say just consolidation, maybe more distribution, but I think if we come out to where I've drawn this up arrow on the timeline, that is most likely the place where we're going to see the decision on directional made. And I think if you go back the last two elections. Yeah, if you go back to the last two elections, 16 and 20, there's been big moves. If you remember when it looked like for a while there, before Trump was declared the winner, the S&P dropped 1,000 points. I remember sitting there watching the election results, and I'm just like, oh my gosh, talk about buying a dip. That was a dip to buy. And by the time I got into my trading desk and got over there, it had already moved like 300, 400 points off the lows. I was watching it. I have the ability, which on my phone here, to I can do a remote PC into my computer. And I was watching and go, okay, I'm just going to go. And by the time I walked, literally within a minute and a half, the market already rallied 200 or 300, thinking, oh, that was it. Well, it ended up having a monster rally. So we're get this emotional. I mean, it could be treacherous. You get it on wrong, but I'm just saying. I think we come into somewhere after the election. It looks like things are going to stay under control at the moment, but we got a long ways to go. Like I said, in the next 30 days, we're going to see the setup that comes in here and what's likely to go on from that standpoint. So, but it's looking. We've seen these patterns before where we just get this mess where it just stays in these tight ranges. Absolutely great for trading because the narrow ranges come in on the daily charts. You just get this nice flat period, and it's absolutely amazing. You know, buy low, sell high, right? Just trade the range, and you can rip them. You can also do some option strategies and do some spreads, some straddles, and some other things that can be very profitable in that kind of environment too. And it's a great time if you own stocks to just be doing covered rights and stuff like that to take on income. But the point is that looks like what we're going to get. So let's carry this out. And I'm not going to do it tonight. I'm going to wait till next week. I want to see this whole week of trading, but I'll do a long-term forecast, meaning we'll go through and look at the quarterly charts. We'll look at the monthly, and we'll try to put a serious top-down kind of view of what's likely to happen in the fourth quarter. So we'll set that up next week. I'm not going to do it right now. We'll see this. We'll come into the second week of October, which will actually be the first real full week of trading for October. And we'll have employment, and we'll have a bunch of stuff behind us. So I think it'd be a good point to judge what we're coming into. I just think the uncertainties of the election are going to weigh heavy as we go forward. But anyway, the algos are all suggesting at least coming down into that level. And you know, I think if one of the things, if you are using indicators, be careful getting too far out, though. I wish I would have made a video of this trade last night. It happened. I write the Substack newsletter late at night. I usually am up writing the newsletter and trading the London Open. Okay, that London Open is amazing, and I think I've told you folks I'm not really promoting them. It's just what I use. There's a website called Financial Juice, and they have like real-time data that comes out. They have some guy, if there's any breaking news, you know, he'll read out the reports. And what's nice about it, the other night, on just a real quick comment on trading, is around the London Open, when all the metrics, a lot of the metrics are coming out in Europe, it doesn't matter whether it's Germany, France, UK, whatever, they proxy the S&P 500. And so the traders in London and around Europe take over the S&P futures because they're very liquid, and they trade them in reaction to these reports. And the other night was epic nature. I think all of the unemployment numbers were coming out in different countries. It was amazing what was going on, because this is the other thing, you know, they actually knocked the market way down, and you knew that the reason why they did that was in reaction to news in Europe, not news that affects the S&P 500 fundamentally, right? So sure enough, it just came roaring back like it never happened. But that proxy period and then the rebalance back, I think it's, you know, if you're a trader, I was talking to somebody in the Discord the other day, and they do the same thing. It's like it's amazing opportunity, and it's there every day. I'm jealous of those of you that live in Europe because you get to take advantage of that every day and be alert at the same time, not at the end of your day. Anyway, so I digress back into this, but this pattern that we're seeing is likely to continue. So I'm going to spend, where are we at here? 35 minutes. I'll spend most of the time just looking at the analysis here. I don't, like I said, I keep saying, I don't see us dropping below those support levels that I talked about. We do have new Fibonacci targets, which I mentioned last night. I didn't mention yet. If we look over here, I'll bring them up on the right-hand side of my screen. I know these numbers are probably small, but 55, 54, 54, 48, and 53, 83, fib target 1, 2, and 3. And so if we got down to fib target 3, that would be a retest of the lows that we made over here on September 9th. So what's potentially setting up here is a retest of those lows, which then would confirm what I've been saying for a while, is that we're really locked in this big trading range. Even though we managed to eke out some all-time new highs in this pattern that we've been trading in, it's still not been material where we're seeing that acceleration and a new trend evolving. What we're seeing is a retest of those highs, slightly new highs, and a rejection off of those levels. Nothing big, but we have seen several rejections. And I remember going back, if you're reading the Substack, talking about if we do make a new high, I expect to see immediate rejection. I don't see it just blowing out through the top because the way the metrics are set up right now, everything's kind of stretched to the limit as far as momentum goes. And then I was looking at these algos being predicted on the AR, the auto regression machine learning was saying, hey, these things are going to come off. And I have to share this because I was talking to a client earlier, and I said there's an Ralph Nelson Elliott quote that I've always used going back to the first book I read on Elliott Wave, which he said, the hardest thing you're going to have to do in doing analysis, whether it's Elliott Wave or something like where I've evolved over decades, is believing what you see. And what happens as you go through time, you start to believe more in what you see. So it's going to take you a few times seeing these algos predicting these moves, and then they happen until the next one, you're going to be on board. You obviously always protect yourself if it doesn't work, but it's crazy. Like I said, I've been picking up crazy trades off the 5-minute chart. It's just insane trades. So, yeah, so I see, I haven't looked down for a minute. Yeah, so, so 50 candles too much. It's fun to look at, right? So right now I've got them set on 14 on the red dot projection. So that's projecting the closes. And I haven't had a chance. I'll talk about it in Discord on Friday. So come there. I'm hoping we get a lot of folks on Discord. I'm not sure if there's a limit to those rooms. And I think we sent out emails. So if you did buy it, buy the indicators, and you didn't sign up for Discord, you're probably going to want to do that. We're also going to be starting another room in Discord for the portfolio management stuff that we're doing, the portfolio expert and WaveTech portfolio manager. So we're going to start finally getting some support going on there. So if you've used a product in the past, it might be a good time to consider coming back on board. And I'll be announcing that, actually working on a newsletter that will be going out. It'll be a free newsletter that's going out every month, basically letting you know what we're doing here from that standpoint. Yeah, if you have, just hang in there. Somebody said, do you have the link for the Discord? The Discord's a private Discord, so it's only for those who got the indicators, and we're going to open it up for those who have also subscribed to PX, which is Portfolio Expert, and for WaveTech portfolio manager. So if you've got that, we're putting together. We've been reconfiguring the whole company in the background. So we just put a new mailer service together. We've had some DNS issues getting some things set up, but I think we'll in the next, probably by the weekend, we'll have everything set up pretty good. So we're going to be sending out emails if you bought the indicators, you'll get an email for the access to the Discord. So that'll happen. So is there a problem with volume here? I can crank it a little bit here, not get too crazy. Yeah, so let me know if that's better. I cranked it just a touch. All right, so let's move on. Let's take a look at the NASDAQ. So the 3-day trade is out. No big reversal on the downside, even though we're pulling back a little bit here right now. Let me see where we are. Yeah, we're down 14 handles. And that's the other thing that's been happening. Last night was a crazy trading range where the markets were gyrating in about, I would say, an 8 to 12 point handle range. This was another around the London opening trade. It was easy pickings, folks, and it was being projected by the 5-minute algos on all that stuff. Anyway, let's keep going. Yeah, I actually have some issues, so I appreciate that. So is it better now? My meter shows that it's pretty high. I'm almost pushing in the red. So I'm just going by what the Streamlabs is showing me here. But anyway, just let me know. I've actually got it cranked all the way. If it's breaking, let me know that too. So if I'm pushing it. Yeah. Yeah, and automation, by the way, Marty, I agree. Automation is deflation. That's absolutely right. And even if these longshoremen get a new deal, it ain't for long. Get your resumes filled out. I tell you to learn the code, but you don't need to even learn the code anymore. Yeah, somebody's saying the course videos, we actually moved them. So we're going to be sent. We reconfigured, basically we rebuilt the entire company over the last 30 days. And this was my decision, Bob's decision to do it. We knew it was going to be clunky and wonky. So just know that you should be getting a new link. We moved it from the platform we were on, and we had so much redundancy and crud around everywhere. So we're trying to get everything situated. So I apologize. Yeah, Alibaba has been pumping. I forget, there was a hedge fund guy. I saw a clip. He was screaming it big time. Definitely a good trade. Maybe whoever said that, if you know like a good ETF trade or something, put it on there, and maybe we'll bring it up. All right, we got to move on. I'm getting hung up on too much stuff here. I would say this is the reason why I spend a lot of time on the S&P. The S&P and the NASDAQ are different indexes, but the top end of the indexes have a lot of common stocks in there. So they tend to have similar characteristics as far as the formations of the charts and the PPMs and all that. NASDAQ has a bit higher beta than the other ones. So the volatility is much higher. So we have that to deal with. But same kind of pattern. The 21-day moving average on the is 19,671. That's probably a point where we could bounce off of. Yesterday, like I said, we didn't. I don't think we printed through. We had outside reversals on the NASDAQ and the S&P. Both of them were negated, so there's no reversal trade, and so there's that. but the patterns are pretty much the same. Let me just go through some things really quick here. Let's take a quick look at the Russell, because I haven't talked about that for a few days. But this is something what I've been talking about here is we keep getting these distribution patterns. This one was classic. I remember writing in Substack where I just put this box up there. This was a classic distribution pattern. And I said, folks are not going to be happy about what's going to happen. So we went all the way back, actually made lower lows than we had in June, all the way back to the 200. And then we just got another one right here. You know what? I got to can some of this stuff. So we have this distribution here. Here's another one. And look at the forecast on the algos are suggesting again, it's showing a move and a bounce right here again. So it wants to retest the 200. And all of these charts, by the way, the 200-day moving average has been the magic number. If you look over here, we bounced right here. We came right here. We came, a couple ticks short, another bounce. Each time we've been there, we got these big rallies that come off of there. And it's being forecasted to happen. It's a Russell daily chart. So this has happened before. So just make sure that you pay attention to this. Looks like we're very close to breaking down. The algos are much weaker on this chart. I won't go on about my scenario. I just don't see this asset class doing much. However, I showed you a few videos ago, I did an ETF hack. I call it the not the Magnificent Seven, but I got 12 stocks that I picked out of 2,000 that I used in this ETF hacking strategy. And by the way, that's one of the things I'm going to be teaching on the Discord for the portfolio management side on those platforms and how to do these ETF rips, because you can take ETFs are for the most part designed to absorb a lot of capital but have a theme. They're not designed to make a lot of money. They're more index based, and if the index moves big and you're lucky, you can grab somewhere between 60 and 80% of a rally. But when you get these little short rallies like this, all there is a little sliver in the middle to grab. So you really can't get those at that level. So, but this distribution pattern seems to be consistent. Let me just pull this out. There was a mini pattern right here, but we literally got these boxes, and somebody's go, oh, inverted Head and Shoulders. I joke all the time. I've only seen two in 45 years. I've only seen two Head and Shoulders patterns. Most of those don't meet the real definition. But this pattern here is interesting because it's really more of what we've been seeing for a long time in this index. So if I went out to a weekly chart, you would see these distribution patterns time over time again. And a lot of that has to do with so many zombie companies, the financials, the banks, all the things that are in here are drastically being, keep this thing from doing much. However, there's some really good stocks, because that ETF hack that I did, matter of fact, let's just, I'll show it to you again. I think it's pretty interesting. I built this in WaveTech, and if we come over here, if we look at these numbers, I know, let me get off screen. If we look at these return numbers, 21, 24%, 16% in 2022, which was a pretty rough year, 50.41% in 23, and now we're up 44.87 so far. And then this is the current open positions, the dynamic dozen, I'm calling this. and this is the open positions in here, and we could actually do one more report and look at the trade profile. And what you'll see, some of these stocks are an underperform, meaning they're long in the tooth. They're probably going to be exited sooner than later. So there's a lot of these trades that are mature right now. So, but I think it's interesting just to take a look at this return. So basically 100,000 to 300,000 in 3 years is what this portfolio did. But this is 12 stocks. So my argument here is simply that if you trade the indexes, you're never going to make 45% on you. Let me re-say this. You're not unlikely to make a 45% return on an index or an ETF. You could, I'm still waiting for, Kathy Wood's ARK to go to some ridiculous number. What does she say? 50% return in 5 years, and it's been 3 years since she said that. I forget the number. It was big numbers. I forget the number. Maybe you guys remember. But just look at a couple comments here. Yeah, I think that I talked about it before. Dow looks like it's bottoming. What time we got? 9 minutes to go. Let's do Bitcoin because I know a lot of folks are interested in that. And Bitcoin's it's got some rough times ahead. This little rally this is a daily Bitcoin. That was it. And we went right into the Fibonacci targets. And if you're reading Substack, the algos projected this right on the money. And we also projected into these 3 Fib targets. We came just short. Fib target 3 was 67.051. We printed 66.5. So that was it, right? We get a rejection back in here. We are in support levels. And I think what I'm looking for here is that the market grid turns up and we start to see some stability. But just like it's interesting, everything as we look at the projections on the algos, they're all projecting even October 8th or 9th as a point where we could turn. And that would be probably, the next data point that we're going to need to watch. So that's when is that exactly? Next Tuesday or Wednesday of next week. That's right, when we're looking at some sort of bottom on the index, on the equity indexes and Bitcoin. And Bitcoin goes from trying to be an alternative asset, you'd think with bombings in Israel, all the stuff that's going on geopolitical, that there's some kind of pump there. Nothing's going on, And actually gold has been probably the most solid. I haven't made any Peter Schiff jokes for a number of months, but the bottom line is that these things all look like they're probably going to bottom out at that point in time. So let's go ahead and let's put the Dow index up. Yeah, this was something. If you go back the last time, I'm not sure when the last time I covered the Dow, but I was talking about this rally that was being forecasted. Once again, it looks like forecasted, at least the intermediate, this 21 period moving average is showing that we're going to move up into, possibly the 3rd week of October. So it isn't bottoming, it has bottomed, I think is a better word. And this little formation here, if we come back over here, we had a mini V bottom here on PPM1, and then we saw a couple more day consolidation. Now we're trading up into this pattern. There is some, I'm just looking here, bear with me a sec. Yeah, so there is some Fib targets buried in here, 101.41, 101.80, 102.19. So we're coming into close to the top end here. But if you look at the red dots, the closing projection, couple of days sideways, still generally coming into this 10 period moving average. And we're looking at, you can see where I have the cursor right now. Let me draw this in because this is a key point. I'm just looking at the screen. It's not that easy to see. So here was this V bottom that was signaled right here. And we actually had a number of patterns that were triggering in here. I'm just drawing some up lines here. So we're getting multiple patterns in this range that were suggesting that this pattern here was some kind of bottoming pattern. Now the projections from the algos have been. This is not a new projection, by the way. We were projecting higher, so now we're probably looking at maybe something like this. Although this is way too far in the future where I'm drawing the arrows now, but this segment right here is still very valid, and we should stay above the 10. This is the 10-day moving average. We should stay above that number from that standpoint. All right, let me do one last thing. We'll call it quits. So this is NVIDIA I've just brought up, and look at the projections back to the 200 on NVIDIA. This would put us, if I just bring a cursor down on it, is back to 101. If you think about it, where the split occurred, we saw the split come in around, I think it was 95 or 100. So what we've done a couple of times is we've seen these rallies up into 120, 130 range, and then sharp pullback. So there's a lot of folks, there's a lot of selling that's going on up at that upper level. And this was one of those distribution patterns as well that came here, very similar to what happened in the Russell. So this pattern here, we do have higher projections, but this is, if you have the indicators, this is one of the things. Let's do a 30-second lesson here. So you see this pattern here, what we're getting is sort of, this is the projection, but meanwhile we have these upward fib targets above here. So you're going, okay, we got fib targets. So is the market going there? And what's happening, since we're breaking down, we're down on support right now. If you look at the algos down here, all the algos are suggesting loss of momentum. And the only way that's going to happen is for lower prices, sideways to lower. So it basically invalidates those numbers. And right here, if I brought up the pattern finder, this point where I just put an arrow, that's the trigger point for these calculations. So if we take out this low, which we're close to doing, I know I got a lot up on the page. I'll pull this off. I'll give you that low. If we take that out, then it will negate that fib targets on the upside, but the algos are already telling you the projections are for prices to flatten, to come down. So this also tells us something else, okay? And I'm gonna correlate this in, and let me come off and come up on the screen, and we'll call it. This is what will be the end of the show. But also, when you're looking at that chart, what it's telling you is chances of the S&P or NASDAQ going, to the moon out of this configuration is probably not very likely. You got NVIDIA. I'm sure if we started to break down the Mag 7 and went through all the charts, we could come up with a scenario that everything's showing a little bit of weakness to down. And then, like I said, if the algos are pointing down and you have these fib targets up, those are usually the signs that we're not going to meet those fib targets. So it's not totally negating them, but it is from that standpoint. And if we trade below that key level, and let me see if I'll just give you the level here. I said I would do it. So that key level is 113.22. So if NVIDIA trades below that, that will negate those upward targets that I was just showing you. So anyway, I think this is going to do it, folks. Sorry for such a late start. I got to show up when I can right now. A lot going on over my side of the world. So, but I want to keep as much engagement as I can with you folks. I didn't get back from my appointment yesterday anywhere near time or have the energy to follow through last night. So hopefully tomorrow we'll get that. Just remember, those of you with indicators, 11 p.m. Pacific time, 2 p.m. Eastern. We'll do the live Discord, and I hope to see you there. Let's get some bodies in there and see if we can chat it up a little bit and make it educational. So, and like I said, those are going to start happening every Friday, and there's going to be probably a bi-monthly or monthly meeting for portfolio management. I have a lot of friends that are professional managers and even tax folks that can talk about, we can bring up some stuff with 401ks and all the kinds of stuff and things that you need to know. So I've got a lot of friends that are willing to help, and yeah, so we'll go from there. Look forward to it. Thanks again for watching. Hit the like button, subscribe. Don't have the indicators. Go here, get the indicators. Make sure you get all this stuff and become part of the community. I'm really pushing hard to engage with everyone. So look forward to seeing you folks. Hopefully, well, I'll be on a little bit earlier. I shoot for about 9 o'clock right now, Eastern time. Hopefully that'll happen. Anyway, have a great evening. Thanks for watching. Hit the like button before you leave. Talk to you soon.